Welcome to Drill Down Earnings. We have quarterly results from GameStop. We're so excited. I'm Cory Johnson, Chief Market Strategist, with the business story behind one stock on the move. That stock is GameStop. Yes, it's moving with these second quarter results. Wall Street likes a beat or a miss, and the revenues were worse than expected. And as much as there's analysis, Michael Packard does a great job at Wedbush. Done a lot of other work from this stock. And a surprise profit of 4 cents a share because they had a lot of interest income, but they actually lost money in the operations of the business. And let's look at that rather than just the beat or the miss. So $798 million in sales, that was down. That was down 31% on a year-over-year basis. That's terrible for this business. And the losses, the operating losses persist. I mentioned there was a profit because they had some interest income, but the business lost money. The operating results, negative 3% margins. They only make profits in as much as they ever make profits in the fourth quarter, but things kind of lousy there. Number of stores, they told us that only annually, but when you look over time, there's 4,169 stores. That's down from what it's been, 6,000 about 8 years ago, but $1.265 million in revenues per store. That number's sliding a little bit, and that's not a good thing. When you think of this business, you think they're selling games, right? Well, no. 57% of the revenues are from hardware and accessories. 26% in this quarter, software and collectibles, 17% of their business. They actually have a bunch of stores in Europe and Australia that are purely about selling collectibles. But when we look at all three segments, they're all suffering. You had an 18% decline in collectibles. You had a 16% decline in hardware and accessories, their biggest business. You had a 48% decline in game sales. Yeah, game sales from GameStop are collapsing. That business is just falling apart. It's a lack of hits in the industry. And again, the relevance of this business shrinking, continuing, as well as hardware. Hardware also shrinking for this business, the biggest part of their business. So how did the stock react with these numbers? Well, the stock doesn't really react to these numbers. The stock reacts to Roaring Kitty and his ridiculous and kind of funny memes. When he posted this thing a few weeks ago, showing him, I don't know, a clip from Toy Story 2, dropping toys. Maybe he was selling his Chewy stock and buying GameStop. GameStop stock went crazy on that particular day. But look, it's trading at 288 times earnings. It's trading at 2 times sales, which is not crazy. But again, with this business, it just gets worse and worse every quarter. It was actually selling down in after hours trading, down about 8%. But it's up 32% for the year, even though things keep getting worse. But what are they doing? They're selling stock. And they're smart to do that, I guess, because there's fools out there buying this stock, and this business that's getting worse. But the stock has so much value that they were able to make money in marketable securities and investments such that they showed a profit in the quarter purely from those investments. And I'm going to have one number that's going to tell you a whole lot about this stock, this GameStop, not this GameStop business. It really tells you the whole story with the Drill Down Earnings Summary and the Drill Down Earnings Bite, the one number that tells us a whole lot right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So GameStop just reporting second quarter earnings. Here's what you need to know. It's not the $798 million they had in revenues. It's not the shrinking business that they have there where all of their segments are suffering and the declining revenues in everything that they are doing. The bite, the one number that tells us a whole lot, this business now has $4.208 billion in cash and marketable securities on the balance sheet. They were able to sell stock to all the people that think this business that is shrinking and getting worse and losing money is actually worth something. Those people bought the stock. GameStop now has the money, and that money on the balance sheet is how they turned a profit in this quarter. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. And leave some comments. I know you GameStop people have some thoughts. Check me out on X at CoryTV. Check out at Drill Down Pod on Instagram and TikTok. We'll look for your comments. We will respond. Can't wait to hear what you've got to say.